To kick us off today, I'm really excited to welcome Amit Bouri, who is the CEO of the Global Impact Investing Network. Amit and I have had the opportunity to speak regularly over the years, and so it's a real pleasure to have you with us today, Amit.
Well, it's such a pleasure to be here. Thank you for having me.
And I wanted to start by talking to you a little bit about what you've seen as sort of the impacts of COVID-19 on impact investing, particularly as it comes to development finance and directing impact investing to low-income countries. I know we talked about this a little bit earlier this year, but I think we've even seen changes in the last, 4 or 5 months.
Yeah, it's such an important topic, and obviously one that we're keeping on top of at the GIIN. One of the things that we've seen is that there is a great need and a recognition of the need for more impact investment capital to drive the response and recovery from the COVID crisis. When it comes to emerging markets, though, we've seen both a great interest amongst investors in deploying more capital to those markets, but also some challenges. Some of those challenges are very operational. How do we conduct due diligence? How do we source deals? How do we move things through a pipeline in an environment where we are so constrained? Many impact investors who are active in emerging markets have focused their early energy on shoring up the companies already in their portfolio, providing them with more capital and more technical assistance. But I think in this next phase, there'll be a lot more kind of exploration of how do we source new opportunities and help build businesses that investors didn't have relationships with before.
As you're talking about the demand we've seen, I think we've seen it beyond what you might define as impact investing. We've also seen a growth in sort of the ESG and sustainability space and some bold commitments by financial institutions. You had the UBS announcement that sort of, for their wealth clients, the default was going to be sustainability investing. And I'm curious what you think that means for impact investing. How do we start to ensure that some of those metrics and benchmarks are in place so that capital is, making a difference and doesn't just get a certain label? And then, how does that translate to development finance? Is there a role that development finance institutions can play to sort of try to get some of, this growing interest of capital to play in this space?
Those are all big topics, so I'll take a crack at them. I think, first of all, our focus at the GIIN is on driving scale with integrity. How do we move more capital at scale, but also make sure the integrity of impact is front and center for that capital? So these issues are very top of mind for us. I think that we are seeing a broader recognition among mainstream investors that if we are to achieve the Sustainable Development Goals, if we were to actually have a world that is truly just, sustainable, and inclusive, we have to invest differently. So we think the inbound interest for many large financial institutions from around the world is a very positive thing, with one big caveat, and that is, of course, that money is actually flowing to things that do genuinely have a positive impact. We're in a moment where there's declining trust in institutions. People are not just going to trust promises or platitudes, but they want to see real results. Results at the community level, results at the national level, and of course at the global level. And that's where that other topic you brought up, the need for rigorous impact measurement and management, is so important. We've been supporting the IRIS Plus system since it was launched. It includes over 11,000 users around the world, and we're seeing a strong uptake from mainstream institutions. So it's not just the remit of the development finance world or philanthropy, but actually mainstream investors are seeking that rigor for how they measure and manage their impact. To the last part of your question, development finance institutions play a critical role. They have a wealth of experience, track record, relationships, as we see more investors interested in having a positive impact, DFIs have to play the role of helping to push the development impact agenda and help to draw in more mainstream capital. You heard from the video the need to crowd in private capital, and that is so critical at this time because people will want to follow those who are already experienced and deep in these markets.
I guess my question to follow up on that is, what do DFIs need to be doing differently then? Because some of the space DFIs might have been playing in the past, maybe private capital will be willing to sort of come into more of those spaces. So how do DFIs need to be reimagining what they need to be doing in this context?
I think it's an important moment for DFIs to continue to push their own evolution and leadership in these dynamic markets. DFIs played a role of going where markets didn't go before, both in terms of geography, of course, but also in terms of development impact, pushing beyond what the private sector would do if left to its own devices. As we see an uptick in investors who are interested in sustainability and impact investing and even impact thinking, that means that the role of DFIs needs to push out further on the frontier. How do they support the business models that aren't yet attractive to mainstream investors focused on impact investing? How do they help those investors go into opportunities that they wouldn't go into before? And also, how do they make sure that there's a great rigor around impact performance, not just impact intention? That will be absolutely critical for the DFI's role and their leadership in this next phase as we emerge from the COVID crisis with an eye towards the decade of action for the Sustainable Development Goals.
Yeah, and I know you guys have been doing a lot of thinking about sort of this measurement and impact management piece, and really looking at, how can you create better alignment, which I think will be relevant across the spectrum from all sorts of investors. I know you recently released a couple of reports looking at how to create better alignment in agriculture and financial services. And so I'm curious, how can investors be more aligned? What are you seeing as you're doing some of this research about what needs to happen in terms of creating this better comparability, so that not only is there this confidence in impact, but that we can actually compare across different funds, investors, et cetera, to have a more realistic picture of what they mean and are more comparing apples to apples?
It's so critical that we actually understand the impact that we're having, both to inform our strategies and drive a race to the top of how we can drive stronger impact performance. We've been thrilled to work with the DFI community, in particular the IFC and the European DFI Association, EDFI, to help harmonize metrics around impact measurement. And we've built that around the IRIS Plus system. Once people are speaking the same language, using the same metrics as they're contained in IRIS Plus, that sets the stage for what I think is really exciting, which is analysis of actual performance. The reports you mentioned that we've released last week are focused on impact performance. We worked with a dozen investors who were using commonly defined metrics for impact measurement. And they shared their data with us so we can develop an actual methodology for how we compare impact performance, not just between businesses and between portfolios, but also in terms of the context of the issues that investors are trying to address. So those reports in particular looked at financial inclusion and agriculture, two huge areas for development finance and very critical to the emergence from this COVID crisis. But that methodology can be applied across the board. And my hope is that as we develop more benchmarking and comparability of impact performance, that will lead to greater impact intelligence. We'll start to understand what actually drives better impact that will allow the entire market to foster collective learning and raise the bar on what impact investing and development finance can accomplish.
Great. Well, Amit, thank you so much for your time today. And I know this is quick, but really great to have you participate and have your voice, and always appreciate your insights.
Well, thank you so much for having me, and I'm really excited for the agenda you've lined up. So I'm looking forward to a very productive day.
Great. Thanks, Amit.
Thank you.